For 4 years, the United States didn't just change presidents. It changed its fundamental posture to the world, its economy, and its own identity. The Trump administration wasn't just a series of events. It was a deliberate, forceful experiment. And whether you celebrated it or feared it, you felt it. The price of your groceries shifted. The trajectory of your career pivoted. The very notion of America's role on the global stage was put through a pressure test. We lived through the headlines, the tweets, the nightly news fury, but now, with the benefit of time and data, we can see the architecture, a series of profound, interconnected policy shocks that rewired the system. So what were the real levers that were pulled? Not just the slogans, but the concrete, documented changes that moved markets, redrew alliances, and reshaped life for millions of Americans? And more importantly, which of these changes are now permanent fixtures of our landscape, waiting for the next president, whoever that may be, to inherit? Today, we move beyond the noise. We analyze the blueprint. These are Trump's top 5 policy changes, what they were, how they worked, and the world they've left for us all. To understand the force of these changes, you have to remember the landscape into which they landed. The post-Cold War era, roughly from 1991 to 2016, was defined by a broad American consensus, a bipartisan playbook. The idea was engagement. Economic globalization through free trade agreements was seen as an inevitable net positive force. Military alliances like NATO were sacrosanct, burden-sharing debates notwithstanding. China's rise was managed through a policy of engagement, hoping economic ties would lead to political liberalization. At home, regulatory frameworks, particularly on environment and finance, were generally expanded, not dismantled. This was the Washington Consensus. And by 2016, a significant portion of the American public, across the political spectrum, felt it wasn't working for them. They saw industrial hollowing out. They felt the sting of the 2008 financial crisis and a recovery that seemed to benefit coastal elites. They watched endless foreign engagements with no clear victory. The stage was set for a fundamental critique. Enter Donald Trump. He wasn't just a different politician, he was a disruptor-in-chief. His core thesis was simple yet revolutionary. Every one of those consensus items was a bad deal for America. Global trade was a ripoff. Alliances were unfair. Regulations were job killers. China was a cheater, not a partner. His presidency would be a sustained effort to overturn that consensus by force of will and executive action. This wasn't tinkering at the edges. This was an attempt to replace the foundation. And it started with 5 key pillars. We're going to break these down not just by topic, but by their mechanism of change. The how is just as important as the what. First, the tax revolution, rewiring the economic engine. The promise was the largest tax overhaul in a generation, the Tax Cuts and Jobs Act of 2017. But its genius and its controversy wasn't just in the cuts. It was in its structural incentives and political engineering. The corporate shock, it slashed the rate from 35% to 21%. Overnight, America went from one of the highest rates in the developed world to below average. The immediate effect? A massive repatriation of overseas cash and record-breaking stock buybacks. The theory was this would fuel investment and jobs. The reality? An initial sugar rush of market euphoria, but investment growth remained stubbornly tied to demand. The hidden pattern? It made shareholders and capital the primary immediate beneficiaries. Then, the SALT cap, capping the state and local tax deduction at $10,000. Framed as ending a subsidy for high-tax states, but its real impact was geopolitical. It deliberately hit blue state high-income professionals hardest. It wasn't just fiscal policy, it was a political signal, reshaping the map of who benefits. And the individual cuts? They were designed to expire. The corporate cuts? Permanent. This created a built-in fiscal cliff, a ticking time bomb meant to force a future political debate on its terms. The takeaway. This wasn't just a tax cut. It was a deliberate reprioritization of economic winners and a reshaping of the federal revenue base for decades. Second, the regulatory rollback, a doctrine of deconstruction. If the tax cut was about adding fuel, this was about removing weight from the engine. But this went far beyond cutting red tape. It was a systemic assault on the administrative state itself. The 2-for-1 edict. On day one, an executive order mandated that for every new regulation, two must be repealed. The message was quantitative, not qualitative. Create a bureaucratic chokehold on new rules. In energy and environment, the change was most absolute. Withdrawing from the Paris Climate Accords, a symbolic global exit. Replacing the Clean Power Plan, pushing for oil and gas drilling, rolling back methane rules. The doctrine was energy dominance, explicitly prioritizing fossil fuel production over climate mitigation. The impact? It slowed the federal push for decarbonization and devolved the climate battle to states and courts. In finance and healthcare, the rollback of Dodd-Frank for mid-sized banks, the gutting of the CFPB's enforcement power, the expansion of short-term health plans, each was a targeted strike at Obama-era pillars. The pattern? Systemic deregulation, changing the risk calculus for entire industries. The mechanism was clear. Use executive power not to manage the regulatory state, but to dismantle it from within. Third, the trade war. Transactional nationalism unleashed. This was the most visceral, real-time experiment. The consensus held that trade wars were lose-lose. Trump's policy tested that axiom to its breaking point. The weapon? Previously obscure tools like Section 232 and 301. Using national security to justify steel and aluminum tariffs redefined the concept, angering allies as much as adversaries. The China-specific tariffs were a direct assault on practices like IP theft. The target was China, but the shockwaves were global. We saw supply chains flinch, then scramble. Some manufacturing did not return to the U.S. in a flood. It fragmented to Vietnam, Mexico, Bangladesh. American farmers became pawns, receiving massive subsidies to offset Chinese retaliation. The U.S. trade deficit? It kept growing. The new template was the USMCA. NAFTA was the worst deal ever. Its replacement was more of an update, but its significance was symbolic. It proved the threat of unilateral withdrawal could force renegotiation. The model shifted from multilateral consensus to bilateral pressure. This policy's legacy isn't the tariffs themselves. Many remain. It's the shattering of taboo, the proof that the U.S. would willingly absorb economic pain to pursue strategic confrontation. Fourth, foreign policy. The alliance audit. This was the most dramatic break from the post-WY2 order, treating alliances not as sacred institutions, but as transactional contracts. On NATO and burden sharing, the constant demand for allies to hit 2% of GDP wasn't new. The method was public shaming, threats of abandonment. It created profound anxiety in Europe, spurring some increased spending, but also triggering a frantic search for strategic autonomy. On the forever wars, the push for withdrawals from Syria and Afghanistan, often against military advice. The objective was clear: end engagements without victory as the prerequisite. The consequences were chaotic, seen starkly in the Kurdish abandonment, and created a vacuum. And then, personal diplomacy, from fire and fury with North Korea to historic handshakes, from cozying up to strongmen to alienating traditional allies. The pattern was the personalization of statecraft, deal-making over alliance building. This created flashes of drama, but often at the expense of predictable, institutionalized relationships. The doctrine here was America first, made literal. Every relationship reevaluated through a single lens of immediate cost-benefit to the U.S. Fifth, immigration and the border. The wall as policy metaphor. More than any other, this was about symbolism made concrete, a physical and legal redefinition of the American boundary. The wall itself, beyond the barrier, it was the ultimate symbol of a shift from management to deterrence. It dominated the political narrative, then the regulatory throttle. Remain in Mexico, the travel bans, the asylum agreements. This was a multi-front war of attrition against both illegal and legal immigration pathways. The goal was to make the process harder, slower, and more forbidding at every single point. And internal enforcement, prioritizing the deportation of any undocumented immigrant, ending protected statuses, scaling up ICE raids. The message to immigrant communities was one of pervasive vulnerability. This pillar's impact is deeply human and cultural, reigniting the most fundamental debates about American identity. It shifted the enforcement paradigm from prioritized removal to maximum practicable enforcement. So, what did this quintet of disruptions actually do? The consequences are a mosaic of economic data, human stories, and a world now looking at America differently. Let's start with the economic paradox. The pre-pandemic economy was strong, low unemployment, solid growth. But was it the greatest ever? Economists debate the causal link to the tax cuts. The undeniable outcome? Explosive wealth inequality. The market boom and buybacks turbocharged the portfolios of those who already owned assets. Wage growth lagged. The tax code now incentivizes capital over labor in stark terms. Then, the supply chain heart attack. The trade war didn't bring back 1950s manufacturing. It gave global business a permanent case of anxiety. Companies learned supply chains anchored in China were a geopolitical risk. The diversification began not out of efficiency, but fear. You're living with this today in less predictable costs. Then, the trust deficit. On the world stage, America's word became contingent. Allies in Europe and Asia now hedge their bets, wondering if the next president will again pull the rug out. Adversaries saw both weakness and a new, unpredictable ruthlessness. The U.S. became a more powerful but less reliable partner. And perhaps the deepest consequence is the domestic fracture. Each of these policies was a cultural signal. The tax and regulatory policies signaled a rejection of climate and inequality concerns. The immigration policies signaled a vision of a more closed nation. The foreign policy signaled a retreat. For supporters, a long overdue correction. For opponents, an existential threat. The policy differences hardened into irreconcilable worldviews. The human cost is in the details, in the family waiting for years in a dangerous Mexican border town, in the coal miner whose job still didn't return, in the soybean farmer saved by government checks, in the European diplomat who now quietly plans for an America that might not show up. This brings us to the crucial question, what of this is permanent? The Biden administration has reversed, modified, or paused much of this agenda, but it has failed, or found it impossible, to fully restore the old consensus. Why? Because Trump's policies didn't just change rules, they changed the baseline. The tax floor, that 21% corporate rate, is the new floor. No future administration is likely to propose raising it back to 35%. The debate now starts at 21. The trade paradigm. The bipartisan consensus on China is now confrontation. Biden kept the tariffs, expanded the tech war. The era of engagement is over. Trump proved the political popularity of a hard line. The deregulatory playbook, the legal strategies, the judicial appointments skeptical of agency power, this infrastructure remains. It's a new toolkit, and the America First genie cannot be put back in the bottle. A significant portion of the electorate now questions the value of foreign engagements and unfettered free trade. Future presidents will have to negotiate with this sentiment. The strategic lesson is this: disruption, once executed at scale, redefines what is politically possible. It moves the Overton window. The next Republican president will start from this new blueprint. The next Democratic president will be defending a landscape forever altered by it. The question for you isn't just, what did he do? It's, what world did this create that I now live in? A world of more volatile supply chains, a more confrontational stance with China, a tax system that favors wealth, and a nation whose internal divisions are now hardwired into its policy DNA. So let's return to our initial question. Trump's top 5 policy changes were more than a list. They were a coordinated shock therapy to the American system: tax, regulation, trade, alliances, and immigration. They were governed by a single, relentless philosophy: overturn the consensus by any means necessary, and prioritize immediate American advantage, as defined by a single vision, above all else. Their legacy is not in their permanence as specific statutes, but in their durability as a new frontier. They proved a president could govern almost entirely against the grain of bipartisan tradition, and not just survive, but command fanatical support. They created a set of conditions, from supply chain fragility to a simmering Cold War with China, that every one of us now navigates. They revealed that in the 21st century, American policy is not just about incremental change. It can be about revolution by executive action. As we look to the future, the real issue is no longer whether these policies were good or bad. The real issue is that they happened. They are now part of our history, our economy, and our geopolitical reality. They are the precedent. And in politics, as in law, precedent is everything. The final question, then, is for all of us. In an era where the consensus can be shattered in a single term, what consensus will we build next?